Welcome to the New York Outlook for Tuesday, the 5th of March 2024. Starting off with the economic calendar. We know we have one red folder news event, however, it's 2 hours after the New York Open, but whatever the news event is, we'll manage our open trade positions accordingly and consider taking additional trade positions. Obviously, because it's quite late in the session, we have a small 30-minute window to find that entry position because by 6 p.m. we'll have to close the trade. And that's particularly because, well, I guess if the news release is positive, supporting shorting of GBPUSD and in support of the pro-trend leg, there's a chance that we may be associated with the pro-trend with the week's high of the week, and thus it might make sense to leave the trade open over multiple days. However, that will need to be assessed. Essentially, if the news is positive for the USD, we'll consider shorting GBP USD and closing any long positions, and if it's negative, we'll consider holding on to any long positions for a bit longer until the target is reached. Speaking of which, let's start with a 4-hour chart and then understand what our objectives are. So we know from a market structure perspective, from the London Outlook, we are in a bearish trend. We have two legs at play at the moment, one being the pullback phase leg and the other being the pro-trend primary leg, both of which giving us reasons to trade long. Obviously, the pullback leg is a pullback phase last point of supply OB, and once this last point of supply OB wicks this level, then it has essentially achieved its objective, and we'll have to validate new pullback last point of supplies to back new long trade ideas, because now we are trading into the pro-trend extreme, which is this OB right here. So this is your pro-trend extreme, and thus for that reason counter trend trades are limited to this target right here, after which point we'll reassess depending on whether this is wicked or body broken from a 4H perspective. In terms of the pro-trend move, we understand the market structure is short and the ultimate objective is targeting this 4H swing low right here. However, in order to do so, we actually don't require any 4H backing, because we have indeed validated this pro-trend primary leg, and as you can see, there's a wick right there which has validated that leg. Usually I like body breaks, but since we're reacting to a pro-trend extreme, there's reason to believe that this is a valid pro-trend leg. So even though this pro-trend primary OB hasn't held, we're still in the area of the leg that supports shorting. So that's the rationale behind why short still makes sense. And then obviously I just explained long. So from a long perspective, what I was saying in the London Outlook is I was waiting for the Frankfurt low of the day to be validated, after which point I'll consider an entry, and then with the ultimate objective of targeting this unconfirmed swing lower high right here, or rather, just stated more simply, the last point where the pullback leg was validated at, and this is the point where we'll have to reevaluate whether the leg is extending or not. That is the pullback phase leg. In the current day, the Frankfurt low of the day and the chalk of this level validates that we have sufficient IRL to continue with our objective of targeting this. In addition to that, we have a confluence being the current day Asia high of the day to support why price should go to the upside. And then in addition to that, we also don't really have any reason to believe why this Asia high of the day will hold, since there's no since there's no Frankfurt or London red folder news to suggest why this should hold, and we're not in an external range liquidity scenario. There's no reason to believe why this will stay intact, and thus for that reason, when this is the case and we have an Asia high of the day that is likely to be swept, then our protocol is that we don't break even until we actually reach this level right here, because more often than not price will just range around and then sweep some liquidity, which would then result in us taking a break even, when and then price actually just sweeps this, gets more liquidity, and then continues to the upside. So for those reasons, I don't break even under the normal protocol where the chalk, where we enter, and then the highest point since the entry, which would have been this level right here. That would be under normal circumstances. The one thing that I did question about a little bit about this trade was, um, does this change things subsequently or not? And what I'm pointing to is actually the fact that the London session made a London low of the day subsequent to the Frankfurt low of the day validated. And my answer to this is no, it does not. And it's because as long as the original idea is not stopped out, we can assume it will hold. So the idea behind that is, in my backtesting or hindsight validation of my trade plan, I didn't consider this to be an invalid trade simply because London put in or wick the Frankfurt low of the day. The idea is, as long as when you took the entry it was valid, then you're either going to take a stop loss, a break even, or a win. Those three parameters don't change dependent on what price swept subsequently. It could very well be that price was just sweeping the Frankfurt liquidity, and thus there's no further liquidity to the downside, and thus now all the liquidity to the bottom has been taken, giving it enough fuel to then pursue to the upside. Additionally, here what could be happening is price may be enticing buyers to say, okay, we've reacted to this, we maybe have chocks right here, and now we've got stop losses right here. So perhaps we enticing them right there. So we might see that price will come up and actually go there. But I'll break even when we reach there, with my ultimate target being this target right here, and that is more than enough to reach ADR. In fact, ADR is 70 pips. Right around there was the last sort of average for February, and still, since we're still quite early on in March, I don't want to use the latest March results just yet. So that's about 49 is 70%. So perhaps just for some context as to that 70% that I'm referring to there, essentially what I found from my data evaluation is that when price doesn't move the full daily range, it will at least reach about 70% of the daily range in most cases. I also found that when there's red folder news events, it's more likely than not that the full daily range will be reached. However, in this circumstance, we're trading counter trend against a pro trend extreme, so I don't want to be greedy. I'd rather just pay myself at this point, after which point, we again against a barrier, and we don't want to just assume that this OB won't hold, since there's a lot of confluence from a higher time frame narrative as to why it should hold. So, having said all of that, I hope you enjoyed the New York outlook, and we'll chat again for the end of day review.